This is somebody who built a £200 million property portfolio.
We took on 400 properties within 2 years.
Do you know the highest number of units you've had under management?
2,100 units.
You're still cash flowing £500,000 a month. What were your profit numbers like at that point?
Rather than giving so much equity to an investor, we went to the institutional market to go and raise £50 million debt and equity revolving facility. No one offers you a large amount of money without a good amount of security. You got to make sure you're ready to put your balls on the line.
We're seeing at the moment a mass exodus of millionaires from the UK market. You're still here at the moment. Can we expect to see you here in the near future?
This government's not really helping.
We are back for another episode of the PBK podcast. Now, each and every week we speak to a property professional and expert in their field, people that have done amazing things. And this week is definitely a special week. Now we have Akeel. How you doing?
I'm very good, bro. How are you?
I'm probably not as good as you, because when I was looking at the numbers, I said, wow, this is somebody who collectively, along with co-founders, partners, family, has built a £200 million property portfolio. How? I think is always the first question.
Yeah, well, hard work, bro, and a long time. Yeah, so no, bro, you know what? We're very grateful, and we've had an amazing team and an amazing journey, not just in the last 20 years, but my whole kind of working career, and just working, bro. Nothing's impossible, bro. And we had a plan, and we worked and we grew, bro. Well, we are where we are now.
Yeah. And I'm a firm believer in hard work. And loads of people work really hard and don't see anywhere near those heights. So I think let's wind it all the way back in. So we're going to get to those big numbers and the types of projects you've done. But just so people kind of get an understanding of you, firstly, whereabouts did you grow up? So
I grew up in Streatham, South London. My dad had a ladies' clothes boutique, and I just had this entrepreneurial kind of role model and inspiration. So like 10 years old.
Was your dad born in the UK?
So my dad actually was born in Kenya, Mombasa. Yeah, immigrated in 1970, and set up shop here, like for looking for economic opportunity.
So your dad moved here, set up his own business when he moved here. So obviously was entrepreneurial and quite, a risk taker as well to move to a completely different continent. Do you think that's something that was then really ingrained in you?
Yeah, absolutely, bro. And, we've got this kind of entrepreneurial spirit from our roots and where we've come from. But it wasn't just that. It wasn't straight away. It was like 16-hour days. You had to just like provide at the beginning. And we saw that grit and that hard work. But yeah, I think over time, you've just got that instinct and you see opportunity and you just develop it and you grow it. And that is exactly what I saw as I grew up.
So your dad had the clothing boutique.
Yeah.
Kind of installed the idea of the importance of hard work and that work ethic. Was he somebody who was like, look, okay, I want you to be in the shop 24/7? Was he like, I want you to be in your books 24/7? What was actually like the dynamic like growing up?
Yeah, no, to be honest, you know what? I'm very, very privileged. I've had an amazing role model in my father, and he was very chilled. It was very much follow your dream, develop your own strengths and your own skill set and do what you need to do to reach your potential. And a lot of it was like by action rather than words. It was like, he wasn't even saying watch me, he was just working hard, and I was watching him and being inspired by him. And I wanted to obviously tell my own story as well through my whole life.
That's interesting, because I feel like particularly in a lot of cultures, like it's almost the opposite. It's very much like, okay, you've seen me do this, but now it's either I worked hard so you work hard, or it's like, listen, I worked hard so you could go to school, so you better be in school whether you like it or not.
Yeah, exactly, bro. And unfortunately, this is a trap that a lot of people, and I'm kind of getting into that age where there's a lot of like awakening, and people are really like struggling with this, like not living the life that they're born to live, or not achieving things that they're destined to achieve, and there's lots of blockers and stuff like that. And yeah, bro, a lot of it is about the role model and the leadership that we have in our family that's been nurtured us. But ultimately, there comes a point where we're only responsible to ourselves at the end of the day.
So, see, growing up in sort of South London, Streatham, School, college. Did you go to university?
Yeah, I did. I done a degree in economics at Brunel University, but I was always working, bro. I always had a job, and it was actually while I was at university, I started managing properties. So over summer holidays, like again, I was fortunate not just to have my father as an entrepreneurial role model, also my older brother. He was 6 years older than me. He already had a roomlet and a property business. So over summer holidays, you know, I would be collecting rent like on Sunday night, knocking on doors, 60, 70 pound a week. We were collecting rents on a weekly basis, bro. No direct debits, no, you know, no monthly payment, nothing like that.
Remember the rent
absolutely,
book with
bro.
the,
Absolutely.
what was it, like the card like in the middle that would rub off so you can say, here's your receipt.
Absolutely, that's the one, bro. yeah, books and books and books of those, bro. So yeah, man, that's where it really began, you know. And I mean, look, to be honest, now like we understand it. That was a yield play. We were yielding the asset, right? And in property, that's what it's all about. And at the time, we were just collecting rent and trying to meet landlord payments and so on. But effectively, what we had a rent, you know, we had a letting strategy that was yielding an income out of an asset.
So was that actually kind of rent to rent before it was called rent to rent effectively?
Exactly. Yeah. So we were the first, like one of the first few to pioneer the rent guarantee model, you know, early 2000s. So yeah, and we found the niche, we found the model which was guaranteeing rent and renting out room by room on a HMO basis. So yeah, it was great. It was a cash business, you know. It was scalable and it was fun, you know.
So you were studying economics whilst obviously working alongside your brother. I think when speaking to your brother, like, was there a reason he picked property as the business he set up? Like, were there anything that inspired him to get into it before yourself?
Yeah, I think, you know what, it's like market, right? It's been on tap of what's going on, and there was a huge growth opportunity in there. He's always been a pioneer in what he's doing, and that's where the opportunity was, close to the ground. We know where the opportunities are. But look, bro, anything is an opportunity that you carve out yourself and you put effort into it. And I was fortunate that there was a lot of template already ready for me to build upon.
Okay, so he said, whereabouts did he set up the first?
So everything was South London.
South London.
Yeah. Okay. So I was supporting him over summer holidays, but then when I went back to uni, I started the same thing in West London, in Uxbridge.
Okay.
So I was doing probably more professional lets, and in South London, it was a little bit more of the lower income, room letting kind of stuff. Yeah.
Okay, but you started over there. And what was some of, I guess, the struggles that you faced early on, particularly before you had the money and the credibility behind you, like particularly when it came to getting landlords to take you serious, being young, being, you know, from an ethnic minority as well?
Bro, to be honest, I haven't really had much obstacle. I haven't really seen many obstacles or many barriers, because they were just like challenges that needed to be overcome. I've been very fortunate. I'm very optimistic. You know, there's no such thing really as a failure or a rejection for me. It's just, you know, part of the process. It's just part of the learning curve. So, you know, like any business opportunity, bro, you have to open new doors and get new contracts and new landlords. And, you know, we were rejected many a time. People didn't necessarily want to give us opportunity with property, but it's just building up track record. And, you know, it doesn't need to be like crazy numbers to start with, just one at a time. We built credibility, and, you know, like the ethics of stuff was very important to us. We were always like, you know, long term. At the end of the day, we weren't here to do a hit and run, and people realize that. And, you know, you build your reputation over a long period of time.
So whilst you was at Brunel studying economics, how many properties did you manage to like get under management yourself during that point?
Yeah, so we were managing probably about 25 properties, me personally.
And wasn't, obviously, say that, for example, obviously I don't know the exact numbers, but a point in time where you're managing 25 properties, even obviously it's revenue as opposed to cash flow, even if each of those properties is £1,000, you're now seeing £25,000 a month go in and out of your account on a monthly basis. Why was it still important for you to finish your degree?
Yeah, it's a good question, to be honest with you. I think it was one of those, like, if you start it, you got to finish it at the end of the day. And there's like at that time, there was some credential and credibility in obtaining my education. And you know what, I was enjoying it. Even part of it was like the property stuff, part of it like retail. And then I took a sandwich year, and I took a whole year out. So until that point, everything I had done was very street. Right, it was a hustle, and for the first time I was in a corporate environment, and you know what, I learned a lot. Right, you know, it was like big corporate infrastructures,
Where did you
big
go?
numbers. So I was at GE Money, which
Okay.
at the time were the second biggest company in the world, right? Before the current tech companies have taken over the top 10. So I learned from the best, bro. Yeah, I had some amazing leaders, some amazing role models, corporate structures, like methodologies, like introductions that I was getting.
What were
It
you
was
doing there?
amazing. So I was a project manager.
Okay.
I was an intern project manager based on quality control, improving like efficiency in the business.
What would you say are like some of your biggest takeaways from working in like a real blue chip company?
For me, it was amazing, right? There was a lot of training. And of course, look, like any corporate big organization, there's a lot of cult, right? At the end of the day, because they want you to serve that whole corporate infrastructure for a long period of time. And that's why they give you the perks. That's why they give you the, the growth plans and so on. But I guess the biggest takeaway for me was thinking big. Like I say, they were the second biggest company in the world. And I saw big numbers. I saw a global presence. So size was probably the biggest thing that I took away, and how big the world was. Because, when you're a hustler, everything's like, big and, it's relative to where you're at. But this just showed me like on a global scale. And then like the corporate infrastructure, leadership, investment in people. These are the real things that I learned from there.
I think that's quite important actually, because a lot of people when they're looking at why they should go into work, and I think the idea of scale and scope of how big things can be is actually a really important driver. Like if all you know is, okay, I know somebody like my most successful friend earns 100K a year, but then actually you get into an industry where you see, look, people are transacting not just in the millions, but in the tens, hundreds, and even billions of pounds. It really goes to show that actually, any business can be a £1 million business with the right level of scale and the right execution, which for people that are maybe questioning what they should do with their time, whether it be a sandwich year, whether it be, just them getting into employment before finding their true calling, I think it can be a real benefit.
Yeah, 100%. And like for me, like the growth factor is very important. I think you always have to be growing, because if you're not, you're stagnant, you're falling behind, you're not keeping up. And the numbers are just it's just relevant to whatever it is that you're doing, right, at the end of the day. But yeah, and it's not even really about greed. It's not about, I need to make more, it's about that growth. It's about that journey. It's about that penetration. That's where the excitement happens. That's where the success happens, because you're breaking through barriers, right? And I'm generally I'm a content person, but when it comes to business, it's finding that right balance between like growth and greed. And you want more for the right reasons. If you want more for the right reasons, then it's a beautiful journey. But if you want more for the wrong reasons, you'll never be content.
Did you ever go after graduating? Did you ever go back to full-time employment, or was it straight into entrepreneurship?
No, straight into entrepreneurship. So, I mean, at the time, we, in addition to the roomlet and HMO business, we were investing in food businesses. So, I don't know, do you remember Take Two Express? So, what we wanted to do is pioneer Caribbean food to the high street. So, it was a food which wasn't readily available. We live in a multicultural society at the end of the day. So, we pioneered bringing some of that to the high street and making that food like more accessible, and available. So we had a few stores. So literally, as soon as I graduated, I was like diversifying into the food business, and we were opening up stores and diversifying, because we wanted to reinvest, obviously, the cash that we had from the property business.
How did you find that business?
Yeah, it's fun, bro. The thing is, like, in the Caribbean restaurant, it's like, but if you had one person in the queue or 10, everyone was moving at the same pace. Like we were on the beach and stuff like that. So the service side of things were hard. But yeah, it's cool. Like food, I think you have to be there. You got to be in the mix. You got to be with the people. And I think for us at the time, it's like, let's diversify, create a franchise, have a chain and so on. And we done quite well. But you got to be in it. You got to be in it. Like whatever you're doing, you got to be in it. You got to be breathing it day in, day out. Like it can't, unless you got like silent investment and someone else is driving it, someone has to drive it. So it was a good experience, but over a period of time, we felt rather than diversify into different sectors, let's diversify within the property sector.
Yeah, because I think that's the thing with angel investing. Is why a lot of the time people say invest in the person rather than the idea, because the idea can be amazing, but if it's poorly executed or doesn't have the right head in terms of directing the ship, it can be disastrous.
Yeah, absolutely, man. And then if you spread yourself out too thinly as well, you can't really do anything better. And every market is huge in its own right at the end of the day. So you don't necessarily need to have your fingers in loads of different markets at the end of the day. If you want, like, as a diversification strategy of your investments, that's great. But yeah, you're going to have challenges, if you don't have the right people leading.
Okay, so you kind of gone into university, you graduated, you dabbled with, I guess, diversification or even some angel investing, as well as the corporate space. But all of that still led you back to property and being an entrepreneur in the property space. Now, look, roomlets, multi-lets, rent to rent effectively, that sounds like it's all the way over here. 200 million portfolio sounds like it's all the way over here. So I need you to fill in the gaps.
Yeah, sure. Yeah. So 2009, Carradine Group was founded by Mario and co-founded by my older brother, Abbas. And I joined soon after. So we're a family business, really set out to make a difference in housing. We wanted to specifically serve the social sector. And this was just after the 2008 crash, so the banks weren't lending, no one was really buying and selling. It was like a global financial property market crash. So the letting business, and I say this, out of every sort of adversity and difficulty, there's opportunity. And that's what we found. And the whole letting business basically opened up. We already had the background of roomlets. So we were able to procure, we already had a portfolio, and that's where it began.
So you started off, when you first spoke, like you were more focusing on, well, you specifically were on the single lets to professional tenants, but you then diversified into what type of property?
So social sector. Yeah, so we built very good partnerships with local authorities, government-funded trusts, and charities, and there was a strong referral pathway of tenants looking for housing. So we actually had a 3-stage growth period, and initially it was a procurement. It was a lease-based model. We were procuring, although we had a small portfolio of property that we owned, which was good because that got us in the door. We had supply, right, and you can command in the market when you have supply. So, but we went on a procurement drive and we took on 400 properties within 2 years.
Let me pause the video for a quick word from our sponsors. Now, let me put you onto something that could seriously level up your property game. When I started investing, I didn't fully grasp the benefits of using a limited company structure. But here's the deal. Over 75% of new UK investment properties are now purchased through limited companies. Now, why? Because it's a more tax efficient way of purchasing. You can claim your mortgage interest reliefs, benefits from lower corporation tax rates, plus it sets you up nicely for scaling your property portfolio and passing on wealth to the next generation. Simply put, it can help you increase your margin. Now, setting up and managing a limited company might sound daunting, but that's where GetGround come in. They handle the entire process for you, from setting up your company in days to managing your accounts and tax returns and ensuring compliance, all under one roof. They even help you find financing to help you fund your investments, your own dedicated consultant, and a completely digital dashboard to track and manage the performance of your investments. But because I'm serious about giving back, I've got a great offer for you. GetGround is offering a free investment consultation plus 3 months of free accounting and tax services when you sign up through my link. Now, this is a huge opportunity to get started on the right foot. So if you're serious about building or optimizing your portfolio, then check out the link in the description. Fill out the form for a free consultation and claim your 3 months of free services. Don't miss out on this. You can even transfer existing buy-to-let companies over to GetGround and still take advantage of the amazing offer. Now back to the video.
On a rent guarantee model, we're working with the high street agents like Foxtons, Dexter's, Ludlow Thompson. We had a corporate let set up. We had very, very strong margins. And we were literally just taking on properties all day, every day, filling them up, within 24 hours. So we were just serving that high amount of demand that we had.
A lot of people in the rent-to-rent sector find it really hard to get on board with the larger agents, the Foxes, the Dexters, Bernard Marcus and the likes. How were you able to operate with these, more traditional agents?
Yeah, I think, we presented well. At the end of the day, we had an offering, we had a track record, we knew what we were doing, and we delivered. It was a lot easier then because right now a lot of people are doing, and unfortunately a lot of people have betrayed the sector because they haven't been able to follow through. Everyone talks the talk, but they haven't been able to deliver. So yeah, we done what we said we were going to do. And like any business, if you do something right, it's all about repeat business. You don't even really need to advertise if you do something well.
So for somebody, I guess maybe starting out now, what would you say are some of the key things they would need to have to prepare them to pitch themselves to an agent or a landlord to take their property on a guaranteed rent proposal?
Yeah, so I think before even going outward, we need to look inward, right? At the end of the day, what's the strategy? Right at the end of the day, we need to make sure it's sustainable. A lot of people nowadays are just hyped, right? At the end of the day, and they just want to dabble or try something. And so there's various strategies. There's social, there's Airbnb, there's short let, there's various sort of high yielding strategies that everyone's getting into. But I think people need to understand, because if I'm a landlord, if someone comes to me and they want my property, I want to know how you're going to make money, because I want to make sure that you make money. So that's what you need. But if you can tell me and explain to me why you're so confident in making money, that's it. Because if I'm someone who wants a hands off, I just want to run a prop co, you're going to give me a rent guarantee. I'm happy with the yield. My bank is happy with the structure. Good luck. Show me how you're going to make money.
Okay, so your main thing wasn't so much about the technical data behind it, or here's our contracts, or here's our security. We're like, look, this is our business model. We are getting paid, for argument's sake, X amount of money. These are the track record of us getting paid this amount of money. This is what we have to pay you. So we're very confident that we're able to deliver.
Yeah, absolutely. Absolutely. And look, it's about building rapport and relation as well, right?
So at that point in time, you've taken on how many properties in 2 years?
So we took on 400 properties in the space of 2 years.
How big was your team at that point?
Very small. So
you see, in my mind, I think I took on 50 properties in that 4 years, and I felt like this is a headache. So if your team was small, how were you able to manage that?
Yeah, so we're a family business, right? So you just work, bro, day, night. And the good thing is, we didn't really have the capacity to have like a big team, because we weren't able to invest. So we were literally, and it was great because it was a wing to wing process. So as I was procuring the properties, 1 minute I'm front facing Foxtons and the agents and taking properties on. And next minute I'm moving tenants in and doing tenancy agreements and so on. So it was a great experience for me, because I learned every aspect of the business. And later on, when we were recruiting, I was able to train and empower the next layer of leadership. And we did get specialisms in the different areas that we needed, accounts and housing and so on. But bro, ultimately it was day night. Like we were at the office 10, 11 o'clock at night, every day, and weekends.
So because these were social housing properties, right? Through, again, like local authorities. What was like this stage of the business? What were the margins like?
We were working on good margins, and it was exciting, bro, because we were always pioneering, so we were ahead of the game. There weren't many people doing what we were doing. We were strong. We had a strong supply of property, and we had strong margins, right? The rates were strong, and we were just on that growth surge. So probably, like, if we reflect, it's probably the most fun and most exciting time that we had, because we were probably lean. It was only kind of us, and obviously over time you start employing people, and the more responsibility comes on with that. But yeah, it was good times, man. It was good times.
At this stage, it was that the local authorities were paying the rent, but you weren't doing like assisted living or semi-independent. You were literally you were taking the properties on from the landlords. You were giving them a guaranteed rent. The local authority would then give you a rent. Were they LHA rates? Were they where were you?
Yeah, so
above that?
Yeah, we used to work with LHA rates, local housing rates, and there was no assisted or supported living, but we had a whole pathway of housing of general needs and homelessness, basically. So we were dealing with very difficult cohorts: street homeless, women suffered domestic violence, people on drug and alcohol programs, and it was quite new for us. We were property people. We weren't really social like housing guys, right? We were bringing the asset, and this was our gig, this was our niche. But we learned quickly what needed to be done. And the best thing that we had is that we cared. We care about the people. Although it's business and it's money, we always had a heart in our business, and we had that perfect. It's never perfect, but we had that balance between commercial and ethical in what we done.
Did you have a type of property you were taking for these 400, or was it, pretty much you could find a way to service any type of home?
Yeah, anything. Look, our demand, the biggest demand was single, homeless, and small families. right? So anywhere between a studio, 1 and a 2-bed was our biggest demand. But we also done 3 and 4 bedrooms, which allowed us to have a whole spectrum of properties. There wasn't really a type of property that we couldn't take on. The demand was that good.
Because I'm just thinking, even sort of circa back to 20, anywhere 10, 11, 12, 14, 15, you're still looking, even at the edges of South London, you're still looking at £1,000 a month for a property. So at the point, and most of them probably a little bit upwards of that. So you're at this point still, you know, in terms of like monthly repeating revenue, money coming in, you're still cash flowing close to like £500,000 a month. So it's still, you know, a business that even 2 years in, we're looking at what, 5 million a year in terms of revenue. What were your profit numbers like at that point?
So we were very lean because we didn't really have an infrastructure. And for us, it wasn't a case of like margin and drawing out profit and stuff. Like, we're consistently reinvesting. Like I said, we were just about growth, and which led us into our next phase, because once we realized that, hey, we've got something here. Yeah, we've got cash flow, we've got a margin, and we've got demand. So that's when we started buying and developing properties to serve some of that, so we could control more of our supply. Because after 3 or 4 years, we were signing up 3 to 5 year contracts, and I wish I had signed up 10 to 15 year contracts, because after 3 to 5 years, they were asking for rent increases, people wanted their properties back, and so on. So we didn't have a solid foundation of supply.
I guess more people were coming into the market, which were eroding the margins as
Exactly,
well. Like,
exactly.
you got it on a 5 year. Some new person's coming in who's desperate to take on a similar type of property. You may have offered 1,500. They've come in and said, we'll offer 1,800.
Yeah, exactly. And there's definitely a lot of that, right? So I think people still recognize that we had a very, very strong covenant. And we used to openly admit that, look, I may not pay you the highest amount that anyone else is offering you, but that's because I'm sustainable. I know I'm here forever. I know you'll see me here in 15 years time, because I'm maintaining my margin. A lot of these guys are hit and run, and they're opportunistic, and they ain't really got a backbone. So tomorrow, when there's a problem, when there's a legislation change, when there's a cash flow issue in the business, you're going to be impacted as a landlord. You won't get that with us.
And I think that is one of the biggest problems with guaranteed rent providers, that a lot of guaranteed rent providers only guarantee the rent when it's sunny outside.
Yeah.
The second it starts raining, there's a shift in attitude, and it's like, actually, how can it be everybody's problem?
Agreed.
What is do you know like the highest number of units you've had under management at any given time?
So 2,100 units. Yeah. And that's properties, right? So within that, obviously, there's more bed spaces depending on the size of the properties.
Wow, so 2,100. We can't be lean anymore at that point. You've got to have more staff and more processes, more systems in place, right?
Yeah, absolutely. And so look, over the last 15 years, there's been like a whole yes, at first it was economies of scale, and then it was diseconomies of scale, and then it's kind of like stabilized in terms of knowing where we're at. But yeah, because we consistently like reinvested into infrastructure, and one of the challenges that we had is, we were not just like London centric. We started investing in London, Surrey, Sussex, Essex, all the way to Bristol in the southwest. So we had like sort of a huge catchment area. And now you're talking about regional directors and regional managers and so on. So, there's been loads of like growth challenges, and like you spike up, you grow, you do well, then you hit a challenge right at the end of the day, almost like a growth spur challenge. And then you have to take stock, you have to recalibrate yourself, and then go again to see what the business needs at that time. There's never really a template. You can write as many business plans as you want, but you will never really envisage what you're going to face.
I think a lot of people are very aspirational, that people have a number in their mind, whether it's, I want to hit 5 million or 10 million or 100 million under management. But was there any point during that journey where you were close to giving up and saying, I want to go and do something else?
You know what? There's been various challenges, right? There's been various difficult days, weeks, and months in the business. But yeah, no, you know what? You never give up, man. Never give up, because if you believe in what you do, you believe in yourself. And there's been loads of challenges, right? Nothing is ever like swimmingly perfect. But yeah, no, never give up, bro, because at the end of the day, you've also got an infrastructure. You employ a lot of people, like, people are relying on you. That keeps you going as well. People are providing for their families and stuff like that. There's an element of responsibility there. And yeah, it just drives you.
So transitioning from doing everything, I guess, on one side of the table, i.e. providing a service to landlords, to being the landlord yourself, building a portfolio, what type of properties did you start to invest in, or what type of schemes?
Yeah, so there was, like I say, that's the second phase, right? Was probably doing we were doing between like a 8-unit scheme up to a 40-unit scheme, right? £1 to £2 million kind of investment. We were just doing sort of joint ventures, getting some money in from the Middle East, and yeah, literally we were buying assets, adding value, refinancing. We were getting all of our money out and profit after 6 months in the good old days. And then you've got a yielding asset with triple rent cover on a 5-year fixed low mortgage, for the foreseeable future. And that was 10 years ago. And obviously since then, it's just been yielding assets, capital appreciation. So yeah, that was that. So that was the more granular, sort of smaller unit stuff. But actually, what we found is we were probably giving too much equity away. We were doing a lot of the work through this whole process. We won numerous property management awards across the industry, from best landlord, social housing provider, tenant. We were getting testimonials from tenants and landlords and the industry experts. So we realized that actually we're the covenant, we're the strength, we're the value add. So rather than giving so much equity to an investor, we went to the institutional market to go and raise a £50 million debt and equity revolving facility.
And I think, just explain for people that are not familiar, like, what does that mean in layman's terms?
Well, that means going to borrow a lot of money and having an open check. But it's just a number, right? At the end of the day, and it was a closed fund. We had a business plan, and we effectively went to borrow a large amount of money to deploy in the sector.
Would I be right in explaining it like this to somebody who's maybe not as familiar, that it's I guess as an investor, it's very much, I guess, almost like the golden ticket of the type of facility that you would want to get. It's realistically like a pre-established drawdown facility that you pay the interest on once you use it, but you have an amount that's pre-agreed. So effectively, it's like a really, really big overdraft that you can use at your convenience.
Yes. But be careful what you wish for, right? Because as the numbers get bigger, the risk gets bigger, the responsibility gets bigger. But ultimately, yeah. But look, no one offers you a large amount of money without a good amount of security. So, you got to make sure you're ready to put your balls on the line as well.
Yeah. What do you think your interest was? Like, did you ever work out, or did you just close your eyes to knowing, like, actually, this is what it's costing me a day. Every day that maybe I'm having a bad day and I don't want to go to work. This is what my interest is if I stay in bed today.
Yeah. No, those. I mean, we're talking about double-digit rates, and yeah, there was calculations made on a daily basis, right? But you can't. You know what? You can't think like it's just a number. At the end of the day, like, you got a business plan, you got a strategy, and you got to deliver, bro.
Like, see, for me personally, like, say for example, I don't know, like, if I've got £1 million loan, and I know that for argument's sake, the exact numbers, but I know, for example, that it's costing me, I don't know, for argument's sake, like, something's costing you £500 a day in interest. In my head, when, like, the painter tells me, he got drunk and doesn't come to work today, and I'm thinking, you set me a day behind. Forget about your day. You've cost me £500 today. In my head, I think I get frustrated. How do you, like, with all these moving parts, with all of this responsibility, like, when you've got, like, ridiculous day rates in terms of your cost of finance, you manage to stay efficient?
Yeah, I think, look, you have to be on the numbers. You have to be conscious of those delays at the end there and what it's costing you, because those numbers are what drive your decision making, right? At the end, and it has to be dynamic. It's not right, here's the start and here's the exit, and let's just get there. There has to be that granular like level of information, because you need to be agile. You need to be changing strategy. You need to be changing your painter, for example, in those scenarios. But for me, it's about the exit. It's about that one eye on the exit. You know what you're building up to, right? At the end of the day, and it's like it's collateral damage, right? It is what it is at the end of the day. That's the model, that's the hustle, that's the strategy, that's the leakage that you have to be conscious and aware of. And you have to be aware of it, because, you know, big leaks can cause like a big sink, right? At the end of the day. So
obviously you've got this facility now. You said you started with what you call, but for a lot of people would be like, you know, still deep, good sized developments, anything from 10 to 40 units. Where did you scale up to? Like, what's the largest development you or as a group have done?
Yeah, the largest development is 467 unit scheme. Yeah, it was actually the largest commercial to resi in the country, in Bristol. So yeah, that's how big it got to. Yeah, and to be honest, it was easier to get money out the door on the bigger sites. And again, you know, like I say, be careful what you wish for, because sometimes it's not just about quantum. It's like, if there's value, it's about value. It's about quantity and quality, and it's about, in business when you're growing, it's about finding that right balance. Because sometimes people want the big numbers, but sometimes you lose efficiency, you lose value in that as well. So you know what, it gave us great exposure and great experience. But yeah, that's the level that we got to.
How did you find that scheme in Bristol? Because that's quite far from South London.
Yeah, it was. So, do you know, we were opportunity led. And look, once you're on the market and you put it out there, you get loads of opportunities. And there's not many people like you know, in that field. There's not many people who can deliver and who got the balls to take something like that on. So you don't have a lot of competition between like the, you know, that 1 to 5 million. There's a lot of people. You know, that's not a massive amount of money to get in, right? With leverage, and everyone's on a hustle nowadays, which is great. But when you start talking bigger numbers, there's not many people who can deliver.
So was that scheme as a commercial to residential? Was it full planning? It was.
So we had it was predominantly permitted development, right, which made things a lot easier. It allowed us to not have to build foundations, get out of ground, and planning and so on. But we did go through some full planning application to add units. Yeah.
As you sort of transitioned into starting doing big projects now, like now you're a large home builder effectively, what did your role look like, and your brother's role and other of the co-founders' role look like in the business? Did you specialize, or were you all still very much mucking in?
Yeah, so the good thing is, a family business, we really complemented ourselves. So we're called sort of 5, you know, different people. You know, Mario is very strategic and visionary. Abs is very like numbers driven, CFO, detail. You know, and Laura and Jen, you know, we had some Laura, who was very operational. Jenny was very much on the numbers and led like, and for the people and the staff. And mine was really like operational and commercial. So operational leadership, and also commercial, making sure like, where are the margins? How do we make money out of it? Because it can just, you know, it can get lost, because ultimately you're in business to make sure you make a margin. So I was leading a lot on the commercial agreements and the negotiation.
So like, now you've started doing large scale developments. You've got 2,100 units under management. At what point do you say, you know what, I want to exit, or I want to do something else now?
Yeah, so we did. Yeah, you know, we had to exit, and we sold a large portfolio, and like I said, it was a sale and lease back, and we retained an equity, and it was tough, because obviously we had the COVID, we had issues with our contractors and so on. It wasn't smooth sailing, right? There was lots and lots of challenges to overcome, but as a team, we were able to overcome those. But so we did have the exit in the end, and it was shortly after COVID, which obviously changed everything, and added a new you know, curveball for everyone. But again, look, we had the grit, we got through, we exited, and then we stabilized our portfolio, because it was a 6-year growth spur, taking on this large amount of capital, investing it, deploying it, and making sure that we could exit. So we were a little bit like, you know, let's take stock. Let's just stabilize. Let's just see what we're all about now, and let's see where we want to go.
What's next for you?
So me personally,
or the business as a whole?
yeah,
You
yeah.
can
So
answer
me,
more
yeah,
collectively as well.
me personally, as you know, like I've stepped down from all operational responsibility in the business and my businesses, and yeah, I've hit 40 recently, and it's been quite symbolic, and I've made major changes in my life. It's been a very transformative year, but yeah, I'm very much like consolidated. I'm not in an operational role on a day-to-day basis. I'm a lot more freer. I'm also like working more to my strengths rather than being very inward and operational. I'm a lot more outward, opportunistic, meeting people, exploring new opportunities. I'm also looking at new opportunities where I'm not necessarily confined to either one niche in the property sector or even the property sector. So there's loads of opportunities that I'm looking at in different sectors as
You're
well.
thinking of starting new businesses, angel investing, like what avenue are we considering?
Yeah, so there's various. I've got a capital fund. I'm investing. I'm being offered a lot of opportunities now personally, and right now, to be honest, this is really fresh for me. Yeah, it's only been a couple of weeks in this new life, and also, bro, I'm about balance as well. I've got a family. I've got 3 young kids. I didn't want to just work forever and then I'll be like, okay, we've got enough money now. We can spend time. The kids are old and they're gone, so like family is important to me. And I want to spend time. I'm about just like enjoying life as well, bro. And money's we all need money, and the more the better, and absolutely right. But what's enough? It's never enough. So yeah, I'm about balance, bro. Enjoy what you've got. Enjoy the people around you while it's happening. Enjoy the moment. And opportunities, like I'm optimist, bro. Like there's lots of like opportunities out there.
For sure. With all of like the money that you've paid like to lenders, to investors, are you not tempted to sit, like you said, a lot more on the other side of the table and say, actually, now let me be the funder? Somebody who's come from all of the experience, I can kind of see where some of the bottlenecks could potentially be, or see deals that would have issues and you would know to walk away from. But would you not look at, like I said, sitting on the other side of the table now and actually being effectively the lender, I guess?
Yeah, absolutely, and we are. We are a specialist lender, and I guess we wanted to pioneer lending property people to lending to property people rather than banks who don't really get it and have like long forms to try and understand. So we do lend to developers and promoters who've got value add strategies, who are looking for equity. We can support them, like mentor them through the various things, and also we can support them with the exit, and also we can sense check a lot of stuff. We've got the scars, right, and people are very hyped right now. So we can sense check. Like we guide a lot of people to make sure that they don't make mistakes, because it sounds glamorous, but when you get into it and 2 years later you don't have nothing to show for it, or you're in trouble, then we're also there because we're having to bail out a lot of situations as well.
But talking about sort of sense and the scars, hindsight now, what are 2 things you would have done differently in your journey?
Wow. Big question. You know what? There's not a lot, bro. Like, you know what? It's all there's no regret, right? At the end of the day, everything happens, and you don't really know what else could have been, and stuff like that. I think we're very positive, and we take on every challenge as it comes, and overcome it in the best way possible. It's never, it's not a wave that's like taking us out, basically. So there's not a lot of hindsight, bro, to be honest with you.
I think I'll give you some of mine, and maybe it might inspire you to.
Please.
So in my head, I always say, man, when interest rates were like 1.9%, why didn't I lock in everything for 10 years?
Yeah.
So that's probably one of my big ones. And again, probably same thing that you touched on earlier, doing guaranteed rent. When you know it works and you know that rents only go one way, should have locked in the contracts. Because some people are looking for longer contracts.
No doubt.
And I was actually the person pushing back, saying, let's just do 3 years and see how it goes.
Yeah. Agreed. No, look, listen, bro, people were buying properties with credit cards, like, with a balance transfer 20 years ago at the end of the day. So yeah, if we look back like that, but you have to seize the opportunity in front of you. Like my dad bought a house in Streatham, right? At the end of the day, probably like 100K, and now it's worth 500K. And I told my dad, like, why didn't you buy more of these, right? And he was like, you don't know what I had to do just to buy this one, to put a roof over our head, right? At the end of the day. And that was the capacity he had at the moment, and it was great. He'd done that, and it provided for us. So yeah, it's about seizing the opportunity, because you can have like hindsight and regret later, but what's in front of you right now?
Yeah, no, definitely. we're seeing at the moment a mass exodus of millionaires from the UK market. You're still here at the moment. Can we expect to see you here in the near future?
You know what? I mean, UK is, what can I say? I mean, look, this government is not really helping, to be honest with you, and previous government hasn't necessarily helped. Like, it's not really promoting entrepreneurship. It's not really promoting like landlords and property owners and landlord supply. There's big like headlines about, funding coming available, but it's very like channeled in a certain way to get to a certain place. But yeah, look, you know what? The world's a big place. And well, so there's a small world now because we're so connected to everything that's happening. But yeah, there's opportunities across the globe. So yeah, at the moment I'm here. We're rooted here. The family's here. We've got all, the portfolio and the investment and the infrastructure. But yeah, no, I am having like international conversations, definitely.
You almost looked a little bit uncomfortable when I described you as a millionaire. Do you feel like it's almost like what's your relationship with money? Like, ever say, okay, the fact that you're a billionaire, like, do you feel like it's almost uncomfortable a little bit?
No, it's all cool, man. You know what? It's a number, bro. Look, to be honest with you, you're up today, you're down tomorrow at the end of the day. And sometimes people say like, money, people change with money. I don't think people change with money. People just are revealed when they have money. And I'm very grateful. I'm a believer of God. Like as a provider of sustenance. So you're up today, you're down tomorrow, bro. At the end of the day, it is what it is. So
I think that is very true. Though, about the money highlights the best and worst characteristics in people. Like it can show things, and when you do and don't have it, like when people don't have money, they do things that are unethical, but
Agreed.
Realistically they do them either way. It's just they're more likely to do them with in your face than behind closed doors. So I think money is not the be all and end all. It's not the measure of a man. It's just a lot of the time it's just a way of keeping count of how well the business is doing beyond anything else.
Yeah, exactly. And look, we need it, like we've got to put food on the table. And actually we should be like, I'm a big promoter of like, economic growth in communities and societies. Because you look at, some of the social issues, they're all socio-economic issues. People not giving opportunities. There's too much like diversity, in terms of, income inequality, call it. So yeah, I think, and not even just that, like, I'm involved in some charities that work, across the globe and stuff like that. And it's about creating those like infrastructures. So like one of the things that I'm hopefully doing is developing like an entrepreneurial school, across the globe for like underprivileged like villages and communities. And rather than just going there and raising money and and giving them, like, we want to teach them how to make money, how to hustle, whatever their local currency, their commodity is. And I think that's why entrepreneurship is so important in any community and society. So we can create these sustainable like things. But ultimately, bro, it's a currency in it at the end of the day, and it's
No, definitely. Final question. We appreciate you coming on. You're busy.
Pleasure.
Before we let you go, if somebody it doesn't have to be a big property, but someone just wants to get started in property and they feel a little bit lost, like they don't know where to go, what to do, what advice would you have for them?
Yeah, so from property, I think, look, there's 4 components of property that you need to think about to make money for. So one is the asset itself, like a freehold or a leasehold. 2 is capital. 3 is a value add strategy, right? What is your rental strategy, or what's your capital or value add? What's your planning angle, or whatever that kind of value add strategy? And the 4th is the yield, right? At the end of the day, each asset has to yield an income, and how is it going to do that? Yeah. So I would say those are the 4 like components that you have to think about. Like, everyone wants to be in property, but it's not easy. You have to find a niche, you have to find an angle. But like I say, if you focus on those 4 things, right, i.e. the real estate, the financial capital needed, the value add strategy, and the income yield of the asset. Those are the components you need to think about.
Okay, perfect. If someone wants to find you, connect with you, how can they get in touch with you?
Yeah, bro, I'm on LinkedIn, I'm on Instagram, Akeel Alidina, Axe1-to-1. I'd love to connect with anyone and explore any opportunities.
Amazing. Well, that has been another episode of the PBK podcast. If you have any questions or comments, let us know in the comment section. If you've liked this video, please make sure you like it. And as always, if you haven't already, make sure you subscribe. And we'll be back next week for another amazing episode. Peace.